And as we're looking at here, North American markets are rallying today. And our next guest is bullish about double-digit gains for the S&P 500 this year. For more on his market outlook and investment picks, let's go to Ryan Detrick, Chief Market Strategist at Carson Group. It's good to have you join us. Thanks so much.
I'm glad to be here. Thank you, Lindsay. Appreciate it.
Let's talk about all this optimism that you feel around the markets, particularly the S&P 500. Why are you feeling so optimistic?
Yeah, so there's a lot we can talk about. I mean, we've been in the bullish camp for quite a while, but I think you look at what just is happening right now, right? I mean, we just are wrapping up a spectacular earnings season here in the United States. We're looking at some of the highest profit margins we've ever seen on record. Very strong, some of the strongest revenue since 2022. Those are positives. I mean, long-term stock gains come from strong earnings, so let's not forget that. But then just the idea of a baton being passed around in a bull market, the lifeblood of a bull market is rotation. Yes, tech has lagged. We can get into that. But look at what's happening. I mean, we are seeing other groups take the baton and lead in the time we're doing this. I know we're not quite at all-time highs, but we're not that far away from all-time highs. This rotation and healthy bull market's alive and well, in our opinion.
It's really interesting to see what's happening right now, especially when you look at economic data that's been coming in. It's been mixed over the last couple of months in the U.S. I mean, you say that, strong earnings show strong results, but what is keeping all these earnings so strong amid tariff, geopolitical tensions? Like, there's a lot of hurdles to factor in right now.
Oh, there's no question about that. And, I mean, housing's not been very strong. I mean, we know that. The labor market, obviously, in the U.S. is, I guess, lukewarm at best. But then you look at the recent jobs data we just had, right? We have the best jobs data, the best number we've seen, in over a year. We've had positive jobs growth 3 months in a row. I think it's over 70,000 on average. So you're seeing some signs it's coming back. The labor market in the U.S., it's kind of low hire, but low fire. I mean, the reality is the consumer is still healthy. Are there cracks out there? Absolutely. But who's going to continue to push things higher? I mean, listen, if the U.S. consumer is still solid, we think it is, we think they are, those are still major reasons to think, this bull market's alive and well in the economic data. One more comment on that. It's not just a U.S. story. I mean, we know that, right? I mean, U.S. obviously has lagged the last 2 years from almost from a relative expectations of the economy, but also from a stock market's point of view. And the reality is we see pickups around the globe on the economic front. So those are just all reasons that we think this is a global bull market, and we just don't think it's going to end anytime soon.
I want to get into the tech side of things because obviously there's been a lot of conversations recently, particularly with the big hyperscalers about spending when it comes to AI, when they're going to see return or results from that. Do you think that that's justified, that some investors in tech are wondering that at this point, or is it too early to be wondering that?
Well, I think it makes sense. That's a great question. I think it makes sense to be wondering it because what happened? I mean, Amazon came out and said they're going to spend $200 billion. That's like more than anybody else. And their stock goes down 9 days in a row. That's like the longest losing streak they've almost ever had in the history of that company, go back to 1997. So clearly the market is saying, when is this going to really benefit, potentially again? What we've seen for 3 years, we saw those stocks go up so much. I think the truth is expectations just got so high. Everybody loved large cap tech. Everybody loved AI. Time named AI, the person of the year, the AI innovators. The bar was just a little high. And now you've had these pullbacks. And I mean, listen, I get it. Software down over 20% from right around the Halloween, late October peak. Yet you have, telecom up over double digits this year, and you have semiconductors that are strong. So it's kind of really a tale of two markets. But to specifically answer your question about tech, yeah, I think we're going to have some opportunities. When we look back 6 to 9 months from now, this tech pullback we've had, there's a lot of companies that still make a lot of money with some very strong moats, much like last February and March when we had the deep seek worries and sell-off. We look back, it's like, oh, that was an opportunity. I think, Lindsay, we're going to have that opportunity again, and this is a nice time probably to be looking at tech to take that baton back over the coming months.
It's going to be interesting to watch. And as you talked about that Mag 7 surge we saw last year, I'm wondering, do you have any different sectors that you are watching for throughout 2026 or sectors that you like coming up?
We do. I mean, honestly, tech, we've always been a little bit more neutral technology. So it doesn't mean we don't like it, but it's not one of our favorites. I mean, right here and now, we look at what's leading. I mean, things like industrials. Industrials earnings are up like 26% in the fourth quarter here. Industrials, energy, obviously materials. I mean, those things have been doing very, very well. And it's kind of, this Mag 7 versus the 493. I mean, the 493 is up like 3% this year. Mag 7 is down 7%. If my math is right, that's a 10% outperformance already this year. So I'm not saying it's just everything but Mag 7. I think we'd say the cyclical areas of things, again, tech, industrials, energy, materials. Those are some things that we still think make sense. This economy, global economy, continues to do a little bit better than probably most people expect.
Obviously, where we're sitting right now, we're in the second half of February, and traditionally this is a bit of a weak period. Do you feel that this year it's turning out to be a little weaker as well? And how are you kind of adjusting your strategy, if so?
Yeah, we're not really adjusting our strategies. We're still overweight equities. We're just trying to say, listen, here's the deal, right? The Dow Jones Industrial Average is up 9 months in a row. It's one of the longest win streaks ever. The S&P 500 is up 8 out of 9, and it's 9 out of 9 if you do total return basis. So we've had a heck of a run. I think investors need to remember that we're going to, spoiler alert, we're going to have a down month one of these days. And honestly, maybe rip the Band-Aid off and just have it be February to get there. In February, the last 10 years, the last 20 years, and last 50 years is down on average, and usually it's later in the month into early March. From a purely seasonal point of view, no, we do not blindly invest in seasonals. But I think with the run we've had, just be aware there's a little bit of volatility and potential weakness. It would be perfectly normal, and honest to goodness, Lindsay, probably more healthy than not, that we can kind of get into again, maybe in April and so, and kind of get this thing going again.
Just before we wrap up, very quickly, because this is an interesting point. Of course, the Chinese Lunar New Year was just happening this week. We're now in the year of the horse. Let's end on an optimistic note again. This is maybe good news, you think? What's your take on this?
Yeah, well, let's just remember this is a fun one, so don't invest in this. But historically, year of the horse markets do okay. But when I looked into all the signs of the zodiac, when an animal walks on 4 legs, and I get it, everybody, I get it. When they walk on 4 legs, markets actually do really, really well, higher like 80% of the time, but well over double digits. Versus things like snakes and other things that kind of crawl or use 2 legs, they don't do as well. So 4 legs, it's a good thing. Year of the horse, don't invest in it. But hey, it is a fun one to talk about.
It's a fun one to end on. We'll play this back at the end of the year and see how that went. Ryan Detrick, Chief Market Strategist at Carson Group. Appreciate your time. Thank you.